This is East Asia Tonight.
Good evening, I'm Atelier with tonight's top stories from East Asia. Uruguay's President Yamandú Orsi is in China for a week as Beijing steps up its Latin America engagement. He's set to meet Xi Jinping to deepen ties, including Belt and Road cooperation. Now, China's factory momentum builds in January as export orders bounce back and hiring hits a 3-month high. Now, after a record-smashing run, gold and silver lose their shine, sending ripples through global equity markets. And Japan's Prime Minister Sanae Takaichi is tipped for a landslide in Sunday's election. Polls suggest a coalition could top 300 seats, closing in on a supermajority, while the main opposition may lose up to half its seats. Ahead on the bulletin, the world's largest annual human migration is back and possibly bigger than before. China's spring travel rush officially begins, with authorities expecting a record 9.5 billion trips to be made nationwide. Uruguay's President Yamandú Orsi has begun his first state visit to China, the Latin American country's largest trading partner, arriving in Beijing yesterday for the week-long visit. Now, he is expected to meet with Chinese President Xi Jinping to deepen the strategic partnership between both countries, including Belt and Road cooperation. Mr. Orsi is also scheduled to visit Shanghai during this trip. And for the latest, we are joined now by CNA's correspondent, Tan Sihui, in Beijing. So, Sihui, first up, tell us more about President Orsi's agenda in China and what is he trying to achieve for Uruguay?
Well, the focus is going to be on political dialogue as well as economic cooperation. From Chinese side, Chinese President Xi Jinping is likely going to touch on the comprehensive strategic partnership with Uruguay, as well as ways to advance the Belt and Road Initiative cooperation. This comes as both sides are marking 38 years of diplomatic relations. Now, visibility is high on the Uruguay side. They are bringing along a 150-member strong delegation. It's reportedly the largest number of business delegates that have been invited by the Uruguayan president, representatives coming from around 90 companies. The Foreign Affairs Minister from Uruguay saying that this is a symbolic and deliberate move by Uruguay to Beijing, as well as domestic stakeholders when you look at the size and the composition of the delegation. And this also comes just as at least 5 world leaders have visited China and specifically Beijing at the start of the year. Analysts are saying that this is a strategic pivot to China away from the U.S., especially with rising unpredictability in U.S. policy. And so they're likely to want to keep communication channels with Beijing open instead of disengagement. And so especially for Uruguay, China being the largest trading partner as well as the leading export destination, especially for agricultural products like beef and soybeans. But negotiations may be tricky, especially since China recently imposed safeguard measures on imported beef products starting from this year.
Also, Sihui, Mr. Orsi, he is the first Latin American leader to visit China, and that comes just after the U.S. capture of Venezuelan leader Nicolas Maduro. So given this perceived rivalry between China and the U.S. in the region, how do you think Washington is viewing President Orsi's visit?
Well, the White House is likely going to watch closely this visit by the Uruguayan president to Beijing. As you said, it is the first Latin American country to visit China. And so analysts are also saying that China is likely going to want to make a diplomatic outreach to the region. And so this could be seen as a diplomatic win on Beijing's side. But if you recall, China and Uruguay have differing views on the U.S. operations in Venezuela, with China swiftly condemning the operations and the capture of Maduro. They're saying that and defending Maduro's as being the legitimate leader of Venezuela. But on the Uruguay side, they could see this as a possible positive development for democratic transition. But this Venezuelan issue will come up likely in the private conversations between Uruguay and China. But then again, the focus will still likely be on economy as well as trade and investment. And so what's ahead on the agenda for the Uruguayan president here in China? He is likely to meet the Chinese leaders. He will also visit the Museum for the Chinese Communist Party, as well as visit the Great Wall of China and the Forbidden City before making his way to Shanghai, where he will be meeting local authorities as well as visit the port, as well as a trade and investment seminar.
Many thanks for that report, CNA correspondent Tan Sihui live from Beijing. And for more insights into China's decades-long engagement with Latin America and how it could be complicated by America's so-called Don Road doctrine, we'll be speaking with Pepe Zhang, Senior Fellow at Universidad Austral. Stay tuned for that. Now, China's state-run People's Liberation Army Daily has said in a commentary that ongoing anti-corruption probes into top Chinese generals, including Zhang Youxia, will eliminate what it describes as a watered-down combat capability and also remove obstacles that hinder PLA's development. Now, it also called on efforts to build what it calls a first-class military that could win future battles. The commentary is among a number of such articles published on official media after the surprise announcement of military investigations into top generals in January. Zhang Youxia is currently under investigation for serious violations of discipline and the law. Now, he was the second in command after President Xi Jinping with a powerful central military commission and has full authority over China's armed forces. Well, the high-profile veteran also outranks the defense minister. Zhang's removal marks the latest in a string of investigations into China's military leadership in the past few months. The Japanese Prime Minister Sanae Takaichi is poised to claim a landslide victory in the upcoming lower house election. Snap polls will be held on Sunday, with the leader seeking a strong mandate for her expansionary fiscal policy. Well, the latest survey from Asahi newspaper positions Ms. Takaichi's ruling Liberal Democratic Party, or LDP, securing a comfortable majority in the chamber. It also estimates that together with the LDP's junior partner, Japan Innovation Party, or Ishin, the coalition has a chance of winning more than 300 seats, while the coalition would need to win 310 of the 465 lower house seats to secure a supermajority. The same poll found support for the LDP has surged to almost 30%. And another poll by Kyodo News suggests 36% of voters plan to back the LDP. Additionally, 42% of those surveyed said that they hope the ruling party would win more seats in this election. Well, in contrast, surveys suggest that the largest opposition party, the Centrist Reform Alliance, is struggling and could lose half of its 167 seats. Ms. Takaichi's ruling coalition currently holds a slim majority in the powerful lower house, but has a minority in the upper house. A win would see her pursuing her fiscal policies, including a consumption tax cut. Still, uncertainty remains. Polls show as many as a third of voters are still undecided on who they will cast their ballots for. A Japan snap election may have possible consequences for its citizens. The vote risks delaying the passage of a bill that extends provisional tax rates on about 400 farm and food import items. The temporary tax rates are set to expire at the end of March. If Parliament does not pass the bill in time, tariffs would ramp up for those items, and with costs likely to be passed on to consumers. The tariff on beef, for example, could jump to 50% from 38.5%, and the tax on cheese used as an ingredient will soar to 35% from 0. Japan's farm minister has called for the bill to be passed swiftly within the current fiscal year, which ends in March. Now, we've got more details on our website, cna.asia, as well as on our mobile app, including this commentary on how the rushed call for an election is seen as a huge wager on the Japanese Prime Minister's personal popularity. Coming up next on East Asia tonight, Chinese EV stocks slide as investors grow wary of a prolonged slowdown amid softer demand and waning policy support. Plus, a vast EU-China trade relationship is under strain, with calls to rebalance growing louder as Europe weighs its options with Beijing. Hello again. Good to have your company on East Asia tonight. It is now time for business news with Roland Lim. And Roland, quite the whiplash there. We're talking about sessions with gold and silver futures. What exactly happened?
Yes, we're seeing a steep correction in precious metals after a record-breaking rally. The pace, it's tumbling, is also reverberating across East Asian equities. But first, a rout in gold and silver intensifying after top commodity exchange CME Group raised margin requirements following a collapse in metal prices last week that was triggered by Kevin Walsh's nomination as the next Fed chair. Let's take a look at the US dollar, which has slightly increased against its major peers. 97.11 is up 0.13%. Meantime, gold dropped 9% overnight, I should say. Right now, it's extending those losses well below the $5,000 an ounce. Silver also plunging more than 30% earlier, pulling back after reaching an all-time high of $120 on Thursday. After Friday's extreme volatility, traders pointing to margin pressure and forced selling as positions unwind. Bitcoin also continuing to lose ground. It is currently trading at $76,679.84 per coin. That's down 2.2%. And over the weekend, it had already fallen to its lowest level since last year's tariff shock. Ether also down by 6.7%. South Korean shares slumped by more than 5%. That's its biggest drop in 10 months on precious metals volatility and renewed concerns over lofty tech valuations. Chip giant SK Hynix shedding 8.7% today, and market heavyweight Samsung is off more than 6%. A drop in tech and resources stocks dragged Japan's equity benchmarks. The broader the tech-focused Nikkei 225 closing down 1.2%, while the broader topics that slid 0.85%. China's factory activity that is, expanded at a faster pace last month as export orders rebounded and output growth accelerated, lifting hiring to its highest level in 3 months. That's according to a private sector survey. The rating dog general manufacturing PMI rose to 50.3 from 50.1 in December. Remember, the 50 mark separates growth from contraction. Now, this contrasts with the official PMI released over the weekend. Now, that showed manufacturing unexpectedly contracted last month. While the official PMI closely tracks large state-owned companies, the private survey focuses on smaller firms. Output growth accelerated to a 3-month high, while new business expanded for an 8th straight month. Export orders returned to growth after contracting in December, supported by stronger demand, particularly from Southeast Asia. Manufacturers also front-loaded production ahead of the mid-February Chinese New Year holiday, with supply conditions broadly stable. Chinese markets ending the day in the red, a rout in commodities markets hitting sentiment across the region. The Chinese yuan right now is currently flat at 6.95, changing hands with $1. Now, the currency has strengthened some 3.4% against the US dollar. Chinese President Xi Jinping called for the yuan to become a global reserve currency in comments published over the weekend. He said that the country needed to build a powerful currency that could be widely used. Now, it's his clearest comments so far on his ambition for the yuan. Analysts say while the yuan has made gains internationally, it has a long way to go to become a reserve currency.
I think we have had questions and discussions about what does it mean to internationalize the Chinese yuan, whether that could mark a shift away from the dollar hegemony that we've seen for decades now already. I think the clearest answer is that it is quite difficult. I think the question and discussion about the yuan potentially being a reserve currency really speaks to all the geopolitics that we have seen. That being said, we are seeing a little bit more use of the yuan in commodities trading. So I do think that geopolitics really play a part of this. But for a currency to really be an international use of reserve currency, it really has to mean that there has to be a convertibility of capital, the easy convertibility. And I think we still have some ways to get there.
Shares of top Chinese EV maker BYD sinking in trade after it reported a steep drop in January car sales. The Hong Kong listing plunged nearly 8%, while those on the mainland declined by as much as 4%. The sell-off underscores growing investor concern that car makers are heading into a prolonged slowdown as demand softens at home and policy support becomes less generous. January sales fell 30%, its biggest drop in almost 2 years, also marking a fifth consecutive monthly decline and weakest January performance since 2020. The automaker has been grappling with intensifying competition and a narrowing technological edge at home. To address softer domestic demand, BYD has unveiled upgraded versions of several plug-in hybrid models, though sales of those vehicles still fell nearly 29% in January. The company is looking overseas for growth. Deliveries outside China jumped more than 43% last month, accounting for nearly half of total sales. BYD is targeting 1.3 million overseas vehicle shipments this year. That's below an earlier forecast, but still an increase from last year. Peers including Geely, Leap Motor and XPeng also tumbling between 1.5% to 7%. China Passenger Car Association predicts car sales to stagnate this year and to log the worst year since 2020. A trade between the European Union and China may account for over 30% of total global GDP. But the trade deficit in goods for the EU has been massively high and growing higher. France has called for Europe to rebalance the relationship. But with US ties also on rocky ground, Europe is wary of souring relations with Beijing. William Denslow files this report from Brussels.
China is becoming a driving force in Europe's electric vehicle market. By one estimate, it accounted for roughly 7% of market share in the first half of last year, up from about 2% in 2022. Zeekr recently unveiled its 7 GT at the Brussels Motor Show. It's among Chinese EV makers gaining ground in new European markets, including the UK and France.
We have expanded our brand presence to 12 European countries. One new country every 2 months, more or less.
But it's been a rocky road for Chinese EVs in this market, as both sides navigate a trade dispute. Citing unfair subsidies, the EU in 2024 slapped additional car import duties of up to 35.3% on Chinese-made EVs. Beijing then launched its own anti-subsidy probes on European dairy, pork and brandy, and imposed up to 41.7% tariffs on several European dairy products. This was widely seen as retaliation against the EV levies. Recent negotiations to ease tensions and soften the blow of the EV duties through minimum import pricing are making progress. But the European Commission's Deputy Chief Spokesperson Olaf Gill tells CNA that many issues remain unresolved.
There are a list of issues and concerns that the European Union has had going back many months and even years that we would require China to address in terms of overcapacity, in terms of unfair use of trade instruments, in terms of trade deficit and so on.
2024 data showed the EU trade deficit with China for goods stood at over $350 billion. But both sides are looking at a different approach to deal with their differences in a complex balancing act to balance trade. The EU says that trade tensions have led to a need to de-risk, not decouple from China, meaning protecting supply chains without cutting off ties. French President Emmanuel Macron calls for rebalancing through less imports and more investment from China. Beijing's also made clear it wants deeper cooperation with the EU in a time of growing trade uncertainty. But the EU's proposed cybersecurity measure could muddy the waters by restricting Chinese tech giant Huawei from its critical telecommunications network. Lin Liang, Director of Communications for the Chinese Chamber of Commerce to the EU, believes practices like this could further erode business confidence.
This is not a fair competition if the Commission aims to exclude specific companies from specific countries. And if there is not evidence-based and is not technically neutral, and this is very detrimental to the competition, fair competition on the ground in the EU.
Some analysts say the US could further complicate EU-China ties. Case in point, President Donald Trump's recent threat to impose tariffs on Canada over its trade deal with Beijing. Facing tensions with both Beijing and Washington, the EU is taking major steps to try and diversify its trade partners. But deals such as with India and the Mercosur bloc of South American nations could take years to fully implement and wouldn't replace the scale and scope of partnerships such as the one forged with China over the past half a century. For CNA, I'm William Denslow in Brussels.
All right, back to our earlier headline. How did gold and silver go from soaring to taking a dive so fast? Well, Roland is here to explain it all to us. So, in a nutshell, what triggered it?
Well, in a nutshell, that's when a crowded trade meets a margin shock, okay? So let's see, three things happened all at the same time. We had a large surge of hot money, particularly from China, going into commodities, especially the precious metals. And then there was the markets reacting to Kevin Walsh being picked as the next Fed chair, and he's seen as a hawk. So they started also pushing the dollar up, US dollar up. And then thirdly, there were margin calls because of the volatility. So metal futures margins were up. And remember, most traders actually don't trade with their own money. They actually borrow on margin. So when the margins go up and they can't put the cash into covering those positions, they have to liquidate. So that's what happened in a nutshell.
Okay, so it's got nothing to do with sentiment. So does that mean in a nutshell that gold simply got less valuable overnight?
No, it's not about gold changing, but rather about people's behavior changing very quickly. I guess the best analogy I could put is that imagine you're in a crowded cinema and then somebody stands up and shouts fire. Now, regardless of whether there's a fire or not, everybody's rushing for the exit at the same time. So this is exactly what happens. This is what a crowded market looks like when everybody's looking for an exit.
Very interesting. Okay, let's talk about sentiment for metal trading in China also apparently happened to take a hit at the same time. And what's really interesting was apparently got to do with a dealer that's nicknamed The Hat. Yes. What's happening there?
Yes, the dealer in China, his name is Shi Hua. He's nicknamed The Hat, I don't know why. But he reportedly fled after leaving $144 million in losses with a chain of metal traders. So what he did was basically, he's a metal trader. He buys metal shipments, but he doesn't pay. So he leaves the company also owing to the supplier. And then that has a domino effect because he's quite a big whale and he's doing a lot of trades. And so you have this position where there's a chain of people who say, I can't pay you because he didn't pay me. Mm-hmm. And so it's not just about one person, but the fact that, trust was broken and this chain of events took place. Now, that isn't to say that this incident in China actually affected commodity prices, but it did come at a bad time because as it is, markets were already nervous and shaky. And now you have this incident also making the market traders themselves even more nervous.
So, looking at all of this, chain reaction, what should be that single one takeaway for our viewers? Well,
I think it's pretty obvious. When everyone's in the same trade, getting out at the same time can be pretty messy. And of course, in any given market, trust is everything. So if one breaks that link, well, that chain tends to be weakened. So three things to look out for, really. and it's quite obvious, really. Look out for the price of silver and gold in the next few days and weeks and see whether it's going to be volatile. You want to also see whether China is going to be tightening regulations and rules regarding trading of futures of metals. And of course, finally, we're going to see whether more firms, Chinese firms, are going to be taking a loss because of this particular hat.
Okay, we shall be looking out for all those 3 pointers. Thanks so very much for your thoughts on that, Roland. Okay, well, on that note, we are going to go for another break now, but coming up on East Asia Tonight. Uruguayan president visits Beijing as China steps up its push in Latin America, intensifying trade, financing projects, and positioning itself as a key partner in a region long seen as America's backyard. We'll get insights on the evolving dynamics and superpower rivalry when we speak with this expert next. This is East Asia Tonight, and here are the headlines we're following. The precious metals rally hits a sudden snag. Gold and silver slide, and the shockwaves are being felt far beyond commodities. China's factory activity grew faster in January as export orders rebounded. A private survey showed it contrasting with earlier official data pointing to a slowdown. The upbeat reading reflects China's export drive, which offsets weak domestic demand. And Uruguay's president is in Beijing for his first state visit to China. He's set to meet Chinese President Xi Jinping to strengthen strategic partnership between their countries. Now, the trip comes as China steps up its economic engagement across Latin America. A Uruguayan President Yamandú Orsi's visit to China this week underscores Beijing's push to boost economic ties with the Latin American countries. From selling cheap goods to bankrolling projects, China is hoping to cement its influence in a region that's been viewed as America's backyard. Now, low-priced Chinese exports, especially autos and e-commerce goods, have flooded Latin American markets for decades now. Beijing ramped up exports to the region in 2025. Up 8% from the previous year to help offset the blow of U.S. President Donald Trump's tariffs. Chinese e-commerce sites Temu and Shein also contributed to the growth. But local industries are starting to feel the pinch. Mexico and Brazil under pressure from rising imports of Chinese cars, such as BYD. In 2024, more than 80% of about 61,600 EVs sold in Brazil were Chinese brands. Meanwhile, Argentina and Chile have raised tariffs or taken other measures to protect their businesses. Well, lots to unpack here. So for more insights, we are joined by Pepe Chung, Senior Fellow at Universidad Austral, and he is speaking to us from Beijing. Well, thanks so much for joining us this evening. So, Mr. Chung, firstly, perhaps you could help us assess China's evolving, growing economic engagement strategy in LATAM right now.
Yeah, sure. Thank you for that question. And I usually think about China's economic engagement with Latin America in four main areas, which are trade, investment, lending, and infrastructure. So if you look at where things are right now through the lens of these four areas, you basically see a mixed picture with trade investment going relatively stable or strong, and the other two areas, I think, underperforming. So starting with number one, trade, that is really still the main driver of the economic relationship between these two regions. We're still waiting for the final 2025 numbers to come out, but I'm estimating perhaps, at least $530 billion. The numbers we do know, for example, coming out of Brazil, which is China's largest trading partner in the region, last year was another record year for China-Brazil trade, $170 billion. So I think in general, the trade between the two regions is still trending upwards. I mean, the challenge there is precisely what you mentioned earlier, that, I think the export of Chinese goods into some Latin American markets are raising concerns in local industries. Now, the second area is investment. I think here what's important to highlight is that in a global environment at a time where Chinese overseas investment has been struggling and seeing very limited growth and significant declines in many areas, Chinese flows into Latin America has been relatively robust and resilient. And part of that is because Chinese investors still see Latin America as an attractive and friendly destination, unlike many other jurisdictions that have really tightened up scrutiny against Chinese investment. And we're seeing some interesting new trends and sectors, Chinese companies investing in EV plants, for example, in Latin America. And I think these are definitely things to watch going forward. And then, thinking about The other two areas that are underperforming, number 3, you think about landing, and that one honestly has been underperforming for years. So it hit rock bottom a few years ago and basically stayed at that bottom level. Last year when we spoke, right around the time of the China Select Forum, China announced the, I think it was 9.2 billion US credit to support development in the region. And, my position then was, we're going to have to wait and see how this will pan out in what shape and form. And indeed, I think that's what's happened. 1 year on, despite the announcement, we haven't seen a significant revival of Chinese official lending to Latin America. And I think there's structural reasons for that. And, and lastly, on fourth, the point about infrastructure is important. Although Chinese firms are still very competitive, they're still winning bids in the region. I don't think it's business as usual anymore, precisely because, there's, especially when it comes to mega projects with potential geopolitical implications and sensitivity. And I think Chinese deals in these projects will probably going to have a harder time to go through in this current climate. And part of that is precisely due to the very significant pressure coming from Washington, which is determined to counter Chinese influence in the region. And that's something certainly we can discuss a little further if there is a time and interest.
Yeah, so let's pick up on that. I mean, let's zoom in on where the competition is getting real, and Panama feels like it's one of those clear flashpoint right now. How do you see? I mean, is Panama a preview of how you think this U.S.-China tug of war is going to play out across Latin America?
Yeah, I think Panama is certainly one of the high stakes, what I call bellwether events to watch in this China, Latin, U.S. space, and it's fascinating to see how the relationship between Latin America, China, and the United States, which was a pretty niche policy topic just a few years ago, now it's gone fully mainstream due to a confluence of geoeconomic factors that I think are here to stay. Certainly, Panama is interesting, and I think other events that will be interesting to watch this year will be the review or the renegotiation of the USMCA, U.S.-Mexico-Canada trade agreement, how the United States react to these events, how the negotiation process plays out. I think that will give us a sense of how punitive and or lenient Washington will be with regards to China's economic presence in the region. And I think with regards to Panama specifically, I think there's a security element to it. And in my view, the security is not a major dimension of China's relationship with Latin America compared to other dimensions such as economic, and certainly not as significant as, for example, the U.S.'s security partnership with the region. This is still a region where the U.S. is by far the most dominant security player. And I think we're moving towards a world where, implicitly and explicitly, there is a few different spheres of influence. And I think there's probably a mutual and unspoken understanding here where, from Washington's perspective, security matters in Western Hemisphere is off limits for China. So I don't think Beijing will pick more fights than necessary with Washington over security matters in the Western Hemisphere. But, I do expect a lot of these back and forth going forward. I think it's very clear that the United States, through, repeatedly mentioning the Donald Doctrine and the national security strategy that came out last December, they're putting the Western Hemisphere back at the heart of U.S. foreign policy. So to the extent that that thinking still continues, there's going to be some degree of U.S.-China competition going forward in the region. And perhaps most importantly, I think, from the region's perspective, we've seen a lot of actions under the second Trump administration, U.S. actions in the Western Hemisphere, but more on the diplomatic, security, and migration front. On the economic front, which I specialize in, I think this is where we need to watch for additional details and information. And perhaps the most important thing to watch out for is what are some of the new U.S. tools, economic tools, and initiatives that will incentivize collaboration both with and from countries in the region, right? So, for example, DFC, the Development Finance Corporation, which received a major capital increase last year, that will basically 3x its financial capacity and expand the geographic mandate. It'll potentially allow it to do a lot more deals in Latin America, in a lot more countries in Latin America too. I think that's the sort of development that countries in the region look forward to seeing more, and they want to see a comprehensive, well-articulated U.S. economic vision towards the region, backed up by resources and initiatives, whether coming from the U.S. federal government or from legislative efforts from U.S. Congress. These are sort of things that will probably go a long way in terms of boosting U.S. economic leadership in the region versus China. But I think the jury is still kind of out on this one. We'll have to wait and see this action, reaction, and back and forth in the coming years.
All right. Well, lots that you have unpacked for us. Thank you so much for your time and thoughts. Pepe Zhang, Senior Fellow at Universidad Austral. Now, Germany's top diplomat says that Berlin will always be closer to Washington than it is to Beijing, despite recent tensions with the U.S. Foreign Minister Johann Wadpol responding to a question from CNA during a speaking engagement in Singapore, adding that Europe will chart its own course in dealing with China or any other country.
Of course, I'm complaining that the United States and the new administration is using a system of tariffs also against Europe. This does not change my assessment of China. China is still the same. Chinese system is still the same, and the goals are the same. And the threats for us, for the international rules-based order, and for our economy are still the same. We do see China as, you know, that partner, competitor, systemic rival, and we, of course, would love only to have them as a partner, but it would be naive because there are irritations, and of course, a lot of things are alienating us from the United States, and then running with open arms to President Xi and saying all the problems vanished in this very moment, and we are only heading to become your big partner. This would be the wrong answer, I would say, but I would still say let's stay soberly in the position that we define our own interests and defend them in front of everybody, be it China, be it the United States, be it Russia or anybody else. And if we do so, we will find a lot of partners in the world as Europeans.
Dr. Wadpol also noted that Berlin can draw lessons from Singapore's approach to trade relations with the world's second largest economy.
Denn Singapur hat natürlich den großen Vorteil der größeren Nähe zu China, eines großen chinesisch sprechenden Bevölkerungsanteils. Und da wir uns als Wertepartner und Interessenpartner sehen, sehen wir hier große Möglichkeiten, auch das Verständnis für den chinesischen Markt, das Verständnis für den Umgang mit diesem nicht immer ganz einfachen Partner, Wettbewerber und zum Teil ja auch systemischen Rivalen zu lernen. Und auch deswegen waren die Gespräche sehr fruchtbar.
Now time for some headlines from media outlets in East Asia. Yonhap News Agency says that South Korea's former First Lady, Kim Kon-hee, has appealed against a 20-month jail sentence. She was found guilty of accepting luxury gifts from the Unification Church. Kim's lawyers say they will challenge the verdict, claiming that she did not receive valuable items. Kyodo News Agency reports Japan's government is pushing back against claims that Prime Minister Sanae Takaichi is promoting a weaker yen. A spokesperson says she was calling for a strong economy resilient to currency swings, not endorsing depreciation. Her recent campaign remarks about the weak yen benefiting exporters sparked backlash from opposition parties and concerns about further pressure on the currency. Hong Kong's construction watchdog has been called on to help smaller firms buy approved scaffolding safety nets at lower cost. It comes after inspectors found plastic meshes at 2 sites that failed safety tests. The industry says smaller firms face heavier burdens meeting new requirements introduced after the deadly Taipo fire. The disaster claimed the lives of 168 people. Coming up on East Asia Tonight, China carries out more executions tied to deadly scam networks in Myanmar. And Japan scours the seabed 6 kilometers deep in a world-first hunt for rare earths as it pushes to break its reliance on critical mineral supply from China. Myanmar is marking 5 years since the military seized power and toppled a democratically elected government. The anniversary coincides with the conclusion of a 3-phase election last month, which critics have called a sham. Well, since the coup, Amnesty International says Myanmar's military has killed more than 6,000 people. More than 22,000 activists and protesters have been jailed on political grounds. Among them is Aung San Suu Kyi, the Nobel Peace Prize-winning democratic figurehead, deposed in 2021. The National League for Democracy, or NLD, which won the 2020 elections in a landslide, was barred from participating. And CNA senior correspondent Liang Wai-kit tells us how the 5-year military coup has shaped Myanmar's political landscape.
One of the most painful lessons learned is that without political dialogue, in that vacuum, violence takes its place. And in the last 5 years, we've seen how both sides of the opposing spectrum were willing and capable of taking violence to a high level. On the resistance side, you've got civilians joining what's called the People's Defence Force, attacking the Myanmar army, carrying out targeted assassinations. Of course, on the military end, they were accused of not just burning villages, but also launching airstrikes, which killed not just their opponents, but civilians as well. The other thing that we've learned is that the army is determined to carry out its promise if it is in their favor. For instance, in the early years, the army chief has said that the army is determined to annihilate their enemies, and indeed they have used such measures to weed out their enemies. And very early on, in the early years, the army kept saying that they will launch elections. Well, they did, but only after 5 years. That's because after 5 years, the mandate of Aung San Suu Kyi expires in 2025. Myanmar military had asked all its former civil servants who had joined the civil disobedience movement to come back. It said that if you have done no wrong, if you are found to have no offences made, when you come back, you will be struck off that blacklist. This is, of course, in anticipation that in March they're going to form parliament, and in April they're going to start parliament duty. So the Myanmar army is now gathering all its former civil servants back so that they can continue to serve the new government. The army has also been making a big show and tell of how the resistance forces, some of whom have come to turn over a new leaf, surrendered their weapons, saying that they know that they're wrong and they now want to join the legal fold. There have been cases of these returns, and they have been publicized quite widely. Now, moving forward, it'll be very interesting to see the role of Army Chief Min Aung Hlaing, whether or not he becomes president. In the past, before the coup, he has said no, he doesn't want to be president. But most recently, when asked, his answer was not so definitive. It means the door is still open. Now remember, 10 years ago, he was supposed to retire, but he extended that retirement in 2021 after the military coup. He again extended his retirement. So whether or not he continues to become army chief or becomes president remains to be seen.
China has executed 4 people convicted of causing the deaths of 6 Chinese citizens, as well as for the running of massive scam and gambling operations out of Myanmar that's worth more than $4 billion. The announcement comes just days after Beijing reviewed the executions of 11 other people linked to scam centers in Myanmar. A court in the southern city of Shenzhen said that the capital sentences had been carried out, though it did not specify when. The court had originally sentenced 5 people to death in November, including members of the notorious Bai family, accused of operating a network of scam parks and casinos. But the group's leader died of illness shortly after his conviction. Prosecutors say the group built industrial-style compounds in Myanmar's Kokang region, near the Chinese border, and they were accused of running gambling and telecom scam operations. The court called the crimes exceptionally heinous and a threat to society. Appeals were rejected. Meantime, Cambodia has launched a massive raid on scam gangs, detaining more than 2,000 people, including nearly 1,800 Chinese nationals and 5 from Taiwan. The move comes amid growing pressure from China and regional countries to crack down on online fraud operations. Now, authorities on Saturday raided a large scam compound in Ba Viet, near the Vietnam border. The Ba Viet site, made up of 22 buildings, operated under the guise of a casino and was reportedly involved in telecom and online scams. Cambodian officials say the crackdown reflects their zero-tolerance policy. The government has intensified these efforts following pressure from China, which has targeted scam networks moving from Myanmar into Cambodia. Japan says it has retrieved sediment containing rare earths in a deep-sea test mission as Tokyo intensifies efforts to cut reliance on critical mineral supply from China. A government spokesperson described the finding as a meaningful achievement in economic security and comprehensive maritime development. The sample was collected at a depth of 6,000 meters by a deep-sea drilling boat called Chiku. The vessel had set sail last month for the remote southeast Japanese island of Minami Torishima in the Pacific. The area, which is within Japan's economic waters, is estimated to hold more than 16 million tons of rare earths. Tokyo says the expedition is the world's first bid to tap into deep-sea rare earths at such a depth. The announcement comes as China, which is the world's biggest supplier of rare earths, ramps up pressure on its neighbor over Prime Minister Sanae Takaichi's remarks last November. She had suggested that Tokyo may react militarily to an attack on Taiwan. Beijing has banned exports of dual-use items to Japan early January, fueling worries in Tokyo that it could choke supplies of rare earths. North Korea's leader, Kim Jong-un, has inaugurated a large greenhouse farm in the northwestern city of Sinuiju, an area hit hard by flooding back in 2024. While Mr. Kim, in his speech, described the completed project as a base to start over for Sinuiju's residents, who are said to have suffered from repeated floodings in the area for generations. The leader hailed the project's completion a wonderful achievement to be presented to the 9th Party Congress, in reference to an upcoming 5-yearly key political event where Pyongyang will unveil future plans in areas such as diplomacy, defense, and economy. Just last week, Mr. Kim attended a groundbreaking ceremony for a project that's part of his aim to build modern factories across North Korean cities and counties over the course of a decade. Parts of East Asia facing a prolonged cold spell. Japan and South Korea have been hit by a record-breaking cold snap, affecting the region since early last month. Some areas in northern Japan have been hit by the heaviest snowfall in 40 years. Snow depth in Aomori City reached 1.7 meters, more than double the norm. Officials say at least 17 people have died in accidents during snow removal efforts, while a dozen others have died due to heavy snowfall. Residents are advised to take caution as houses and other buildings could collapse under the weight of the snow. Meanwhile, South Korea was also shrouded in snow overnight before easing off earlier today. Seoul has issued an alert on slippery roads, advising commuters to use public transport. Heavy snow warnings in the country have now been lifted. China's annual travel rush has started today, marking the start of the world's largest annual movement of people ahead of the Chinese New Year holiday. The 40-day period known as spring travel, or Chunyun, is set to run until 13th of March. Authorities are forecasting a record 9.5 billion cross-regional passenger trips to be made nationwide, and that would mark the highest total ever recorded for the yearly event. Road travel remains the preferred choice, accounting for about 80% of all journeys. 540 million trips would be made on rail and 95 million on flights. For hundreds of millions of Chinese, Chunyun is the annual homecoming for family reunions. Authorities say extensive measures are in place to ease congestion and improve services during the country's most important holiday. China has also extended its Chinese New Year break to 9 days for the first time, from the 15th to the 23rd of February. And that wraps up this Monday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. And look us up on Facebook and YouTube. Thanks for watching.